Hey guys, welcome back. In today's video, we are talking about the AMC gamma pressure, how we are breaking the shorts, the price upgrades, and many more in this video. First, we're taking a look at this. All large buys are pushed to the dark pools. You can see once again, as we see pressure coming from AMC, especially on today as well, where we're up 7%, we're seeing the buy orders go into the dark pool. Now, this isn't just for today. This is something that has been ongoing for a very long time. You see it on red days, you see it on green days. And there's all with the purpose of not allowing the price of AMC to go up to where it should be. We've seen it being taken away on red days because they want to push the price down, and they know that people will try and buy the dip, so they try and push the price down. We see them trying to take away from the green days because they also know that when people are buying and they're not stopping, the price can easily go up 10, 20, 30, even 50% within a day. We've already seen that recently where it's gone up 22%, and we definitely have seen it go up 50% plus in the past before. And this is what we're talking about with the dark pool usage and the constant suppression and manipulation. But it just confirms what we have been saying. The fact that they need to use the dark pool, especially on days like this where they need to hide the large buy orders, it just shows how worried they are about AMC. If we take a look at it here, US markets finished 2025 with a 100-day average of 27.76 in total market hidden volume. So the average hidden volume for the year was 26.86%. This means over a quarter of all market in volume in 2025 was rooted dark. Now, 25%. Every 1 in 4 trades has gone into the dark pool. It's already a crazy statistics. The fact that 1 in 4 is going into the dark pool. Now, what's even more crazy is that the market average is 26%, but the AMC average is 70 and sometimes even upwards of 80%. So when we talk about AMC suffering suppression, is facing the manipulation, we are talking about how severe it is. And this is what we are comparing against. People will always say that every stock has faced dark pool. And yes, we've said that, but you have to understand the average is 26%, not 80%, not 70%, not 90%, which we've seen on days for AMC. And when we see dark pool, especially with what we just talked about at the start of the video, it just goes on to talk about what these hedge funds and market makers are trying to exploit, but also what they're trying to hide away, because they know if they're not hiding the buy orders, if they allow AMC to run freely, we're gonna see it go up into the price range we have always talked about. You can see we've been getting great news after great news. Box office has been off the charts. AMC is doing better on every quarter. AA buying shares, millions upon millions went to AMC this past weekend, breaking records. And of course, we are at a rigged 180. Now, it just goes on, firstly, to take a look at what AMC has achieved recently. We've already talked about Adam Aron buying shares. We talked about how AMC has just seen great news, ranging from the Q1 earnings all the way to breaking records with attendance to efficiency of operation. All of these things are things that AMC are doing right now. And the fact that we're seeing it still at this price, and even though we are up again 7% today to 196, it still goes to talk about how undervalued we are, but really just the manipulation that's ongoing. When you take a look at what we are seeing here as well, dark pool is one. But another thing right now is all these shares that are being used to borrow on AMC, and the fact that they want to ensure that $2 doesn't happen. You can see suddenly the shares available jumps up and spikes up for AMC. We're seeing it go upwards of 4.5 million. Now, we talked about the two possible explanations for this. Firstly, it's because of the rehypothecation, the synthetic shares that exist for AMC that they are creating every single day to fill the pool, to allow these market makers, to allow these short sellers to borrow and locate shares to then short AMC. The second is what we talked about with these. Recently, we've seen big institutions buying large amounts of AMC. And what we are likely to see them doing is potentially lending out these shares. And we talked about how this is a double-edged sword, because on one hand, lending out these shares allows these institutions to make money to then buy more AMC shares. But what obviously comes with it is the fact that the shorts are still then able to find shares and short AMC. Now, in the long run, if we are able to see them kind of run out of liquidity and we force them to create more synthetics and then they have to buy back AMC, then it's obviously going to be a good move. But in the short term, if we are seeing a large amount of shares that are being available at allows these short sellers to locate to then short AMC, it obviously will have an effect on the price. And hence why I've said the double-edged sword. You can see other means of how they're trying to manipulate the price, how they're trying to put a bad sentiment on AMC. You can see here we're talking about attendance skepticism. Despite reporting its highest May attendance since 2019, concerns linger about high ticket prices and heavy debt overshadowing the stock's recent rally. Now, what they're trying to talk about is when AMC went down yesterday, and they try and link it to what we see here with the skepticism on the attendance. Now, already this is ridiculous. The reason why I say this is because we've seen how in the past they try and find any news they can to make AMC's price action make sense. We've seen how AMC goes up 15% in a day, and they're trying to use news that are a week old, that are a month old to explain what happened when AMC goes up 15%. That clearly doesn't make sense. How can the news that has happened a month ago, a week ago, affects AMC a week later to suddenly see it go up 15%? The same goes for this as well. When they've desperately tried to manipulate AMC through shorts, FTDs, options, tokenizations, they try and blame it on the fundamentals, the attendance skepticism. Another reason why I say this is ridiculous is because we can already see here, Christopher Nolan's The Odyssey briefly crashes AMC's app as tickets officially go on sale. So this is just another showcase of how people want to go to AMC to watch movies, and they are attracted and incentivized to go to AMC. So already when they talk about attendance skepticism, they're talking about how people are worried about the high ticket prices. If people are worried about high ticket prices and they want to go to other cinemas, then AMC wouldn't have seen its attendance, record attendance. Secondly, if people are worried about the ticket prices, they wouldn't then go into AMC's app to see this much volume to crash the app just to buy sales of the tickets. And so when we talk about all of these news that they're trying to kind of splash out to push people to the other way, we're talking about how ridiculous this is. And you can ultimately see it here. If I can't talk you into buying AMC this summer, how about Cinemark, IMAX, or EPR? Now, the thing about this is how this is what we talked about in the past before, with how slight optimism, slight positive sentiment, but really they're trying to push a negative agenda. What I mean by this is that obviously, when to just take a look at this, if I can't talk you into buying AMC, it feels like that they're trying to tell you to buy AMC, but you are the one who's not willing to buy AMC. But what they really are trying to push is forget AMC, let's look at Cinemark, IMAX, or EPR, because you can even see here, they're trying to talk about 10 stocks we like better than AMC Entertainment. Why are they trying to push another stock? If you want someone to buy Cinemark or IMAX, you wouldn't talk about AMC. Just like when we talk about AMC, we wouldn't talk about IMAX or Cinemark. So this is what we said with how different articles are being used to get you to stay away from AMC. This isn't the first one we've seen. This is, like I said, somewhat slightly positive in the sense that they're trying to use a hint of optimism, but to try and push a different agenda. But in the past, we've seen plenty of different articles where they've straight up said, sell your AMC shares, never buy AMC. And we've seen how those articles are used as a way to create a negative sentiment and ultimately to help these short sellers get out of the position, because they didn't let AMC run up on a great ER, they drove it down instead. Then we get a run of great box office and they drive it down again. So much options related, they won't let us above $2 till until June 18th. And it just goes on to talk about what we've said with the gamma pressure that's ongoing, with what they're trying to suppress, but ultimately one day we will break them. And in fact, we are already seeing slight hints of that. You can see here a visual inspection of the volume during the recent AMC run-up versus the even more recent drop. Suggests there are considerably fewer AMC shares trading on the open market now than before the run-up. So what we are seeing right now is, again, failing to rehypothecate in the sense that of what they were doing in the past. Previously, a few years ago, we've seen how kind of on top of rehypothecation creating synthetics. Now, as we're seeing kind of the margin requirement catching up, as we're seeing the illiquidity, they're struggling to do so. And it's why we've been seeing AMC having days where it's gone up 15, 20% in a day. Now, this isn't to say that AMC can't go up 15%. We've seen AMC go up 15%. We've seen AMC go up 100%. But in the past, they've done so much to prevent AMC from having a double-digit price increase in terms of percentage, but now we're able to see that quite often, and it goes on to show about how much the shorts are struggling. You can also see here the slope and distance between peaks might give a hint of where we are in the process and at which pace we are moving, where we have to understand that currently we are still in a very positive sentiment. We are still looking at the price movements of AMC. We're still seeing accumulation, not just from institutions, but from the apes, from the retail. And we're seeing how more and more people want to buy AMC. On the chart, it may not reflect that, but that's just like what we've shown at the start. They are hiding the buy orders, but it doesn't hide away from the fact that people do want to buy AMC. And we've seen AMC down 1%, but it wasn't even traded 1% of the float. This just kind of goes on to talk about what we've said with rehypothecations, with the fake shares, and how we know that they've tried to suppress. Another thing is that when you zoom out, when we take a look at AMC, we're still in a very good price. When we do break kind of the max pain, when we do break these certain thresholds, we are going to be seeing this short struggle. That's why even the small movements, the small pullbacks is nothing to be worried about, because already when we saw AMC go up and then pull back, people were then saying it's over. And then we suddenly see it go back up to $2. And when we see a pullback, we had another 7% day. It really just kind of confirms what we know of how resilient apes are, how resilient AMC is, and ultimately what we are looking at. And you can see they continue to try and sell a box AMC, but the theater's fundamentals improve and the apes continue to hold. Sorry, AMC isn't going bankrupt. So this is the mindset that 99% of the apes have. Continue to average down, continue to accumulate, continue to hold, continue to fight back against the corruption and suppression. And this is how we ultimately know that short sellers are going to lose. Another thing to look at when we talk about shorts are panicking, you can see 2.5 million reported shares sold short today after record-breaking earnings yesterday. So the short selling is still ongoing on GME, is still kind of rapid, and it's just kind of when we talk about how you'll see AMC go up and suddenly something happens with GME. Two completely unrelated stocks in two completely unrelated industry, yet when they go up, you start to see the problems happen in two things. You start to see the problems happen within the institutions. The same applies for when GME runs up, and suddenly you're seeing all the problems on the AMC institutions. It just happens again. And this is what we said with how it's the mutual short sellers, and they are caught up in a massive margin requirement. And we're also looking at how GME just received its first analyst upgrade since 2020. It also goes on to talk about where we are and how well we are doing. Now, the problem for the short sellers is that Citadel continues to go after high-frequency trading pattern owned by high-frequency trading solutions, where we talked about how they're seeing the struggles in the market. Citadel relies on these tactics, and they are already seeing problems happening within their own firm. So if a large market share is going to get taken because of these patterns, because of these innovations, you're going to be seeing them struggle. This is why they're going after these companies. Another big thing, Bitcoin falls under $65,000. A major thing, because we talk about how the assets collateral is falling and how the market makers will then try and squander for money. Reverse repo, 1.1 billion, also decreasing low. We're going to see it fluctuate, especially at times like this, but the fact that we're seeing it at this price, it lets us understand where we are in the market. Also, remember, we are seeing how these firms have eliminated the PDT, which is the pattern day trader rule. And we talk about how this was ultimately a way to inject liquidity into the market because of the struggling of collaterals failing. So you can see how everything is starting to link up. Another thing, Ray Dalio has said that the AI bubble will burst eventually. Not going to go too deep into this, but if you do want to hear it, comment down below and we can go into that. But it just goes on to talk about the overvalued market, especially with what's going on recently. Now, definitely understand with the capex, the whole investments going into memories, going into the photonics industry. There is a reason for why the market is seeing the volatility is now, but it doesn't then take away from the fact that perhaps we are seeing an extremely overvalued market and that it will burst eventually. And then finally, hedge funds slams the door on quick cash withdrawals. Another showcase of the struggle for liquidity. And it ultimately just goes back to what we're saying with how AMC, GME will thrive when the market recession happens. As always, understand financial advice, and I'll catch you guys next time.